There is only one secret to trading supply and demand zones, and in this video we're going to go over that secret. As a matter of fact, I'm not only going to go over that secret with you, I'm going to take you by the hand and I'm going to show you how to properly approach supply and demand zones. I won't teach you just the secret to trading supply and demand zones. I'm going to show you how to utilize this secret to start making money as early as tomorrow. You can use this strategy to trade stocks, options, cryptos, even futures. So pay attention, because your trading is about to change forever. I'm sure you guys have heard the acronym KISS. Keep it simple, stupid. And we're going to keep it super simple here as we jump into this. What are supply zones? Supply zones are areas where when the price action reaches, there are more sellers than there are buyers. So you will have a lot more sellers either trying to get short or sellers trying to unwind or take profits on their position. So anytime the price action reaches this zone, it creates a level of resistance, and you will see price action quickly pull away from this level. This is what's known as a supply zone. Now remember, supply zones are never to the exact dollar amount. That's why it's a zone. You will see price action fluctuate through that level. It's never going to be a huge move to the upside. If it's a supply zone, it might puncture it by a few, and then come on back down. That's why it's a zone you have to be mindful of. Demand zones are the opposite of supply zones. When you reach a demand zone, it is a level where when the price action has pulled back and reached this level, you'll see buyers outweigh the sellers. Buyers are going to step in. They're going to start absorbing those positions. As sellers are sold in the supply zones, when you've pulled back into this demand zone, you'll see buyers step in and take control, thus creating a level of support. And that's where you see those bounces begin to take place. Now, remember again, this is a zone. It's never going to be to the exact dollar. You might be asking yourself, great, now I know what supply and demand means, but what's the secret? Well, the secret can only be shown on the chart. So let's jump into these charts right now. First, I'm going to show you on a futures chart, and then I'm going to show you how to do all this, the secret, and apply it, and how to make money with it on a stocks trading chart, so you could see that this can be applied across the board. The secret, guys, is being able to identify those supply and demand zones. And once you do, be able to couple them together with chart patterns or trends on larger time frames. That's what nobody teaches you on here. Now, you do nothing with just knowing this secret. You have to know how to apply it. The only way you're going to be able to start making money with this as early as tomorrow is going to be if I show you how to apply it. And that's what this chart is for. This chart is from my futures trading on the NQ. Speaking of futures trading, link in the description and comment section to the prop firm I trade for with an 80% off coupon code. Use my coupon code. It's always going to give you the deepest discount available. You can trade and pass up to 20 accounts and become a funded trader with 20 accounts under your belt. You can make $1,000 on each account. You just pocketed 20,000 bucks, guys. Take advantage of that. Let's jump into this chart and let me show you how to identify these levels and what to do with them. Here, we've found ourselves with a supply zone, okay? You have, there we go, I see it now. You have the chart, and I pulled away from the supply zone where chart clearly has shown you there's going to be resistance. And now you're just trading in the middle. You're trading in the middle between a supply zone and a demand zone. Now, what else do you have here, guys? I'm gonna pause for a second and let you look at this chart. You have yourself a head and shoulders pattern. Here you have your left shoulder, your head, and your right shoulder. We know this is a bearish pattern. We know that we've pulled away severely from your supply zone, and we've gone down to test what? A demand zone. Now, typically, you would be looking here for a jump off this level, because we've known that every time we've gotten into this level, the buyers have outweighed the sellers, and it's caused the price action to jump. Now, think about it this way. If you are getting long in here in this demand zone because you expect this price action to continue to the upside and it breaks underneath, you're going to stop out, aren't you? And that's going to cause a flush on the price action, because you've now broken through that demand zone after rejecting the supply zone, and you've sold off from it. That, my friends, is a great level to look for a short opportunity and capitalize on the move down. You have not only a head and shoulders pattern, which is bearish, but you've also broken underneath the demand zone, which is again a bearish signal. Two bearish signals lining up together giving you the perfect opportunity to watch and wait for an entry on a short position to capitalize on that move to the downside. That's one way to capitalize on these moves and utilize these secrets. Remember, the secret is simple. Identify the supply and demand zone, and then couple that together with a chart pattern and or a trend on a higher time frame. This will give you better chances at having this trade work in your favor. Now let's move on to the next chart. So here you have a stocks chart. This is Facebook, and you have a clear defined level of demand. The first thing you want to do is, if this is your intraday chart, is you want to look at this level and you're looking at it and you're like, okay, well, every time we get down into this zone, we jump off of it. Remember earlier how I told you that sometimes, remember, it's a zone, sometimes you'll pierce underneath it, right? Or if it's a different level, a supply level, you pierce just above it. In this case, we're talking about a demand level and we're piercing just underneath it, and then we're reclaiming it quickly and jumping right off that price level. Other times you're not getting into that little level right there exactly, or just above it, because it is a level. You have a demand level where every time the stock price action gets into that zone, you get a lot of people wanting to buy it. It becomes something that's in demand. They want the price action, jumps right off of it, and that's what you're getting here. Now, once you identify that, what do you want to do next? Look at the larger time frame. Earlier we identified it with a chart pattern. Now what you want to do is you want to look at a larger time frame. Do we have a 15-minute chart that shows this level as well, or an hourly chart, or better yet, do we have a daily chart that when we draw this line shows us that it's the same exact level or the same exact zone where there is demand? If we're seeing that intraday and we couple it with a trend on the daily, again, my friends, you have almost nothing to fear here, because it is giving you all the things you want on your checklist in order to get long this position. You know where your stop zone is going to be. Where's your stop zone, guys? If you get long in here or up here or up here, your stop zone is going to be underneath, right? Underneath that demand level. When that demand level gets broken, that's when we cut or loose, because, well, buyers are no longer in control. So you get long, set your stop, and then you take profits as you push up higher. And that's what you got here. Got into the zone, we pushed up higher, pulled in a little bit, pushed up higher, pulled in a little bit, pushed up higher, pulled deep into that zone again, and immediately, right? Look at this very next two candles. That's how you know there's strength there. That's how you know that that demand zone is still intact, and one can get long in here, put a stop down here, and wait and push to take profits along the way. Now, I have one bonus feature to show you here, so bear with me. Let me show you this. So here I have for you a live trade of me trading in an evaluation, trying to get a funded $50,000 account trading for the prop firm. Now, what I did here was very simple. Look at the chart. You can see clear as day every time we get into this vicinity between 82.50 to this 82.30 zone, we jump off of it. We push off of it. We pushed off of it here. We pushed off of it here. We come back up into this 50 zone. And what are we doing now? We're pushing off of it again. What is this zone, guys? It is a demand zone. That's right. Every time the price action gets into that level, demand comes in. These buyers step in and outweigh these sellers, and we're getting these pushes off this zone. Now watch this trade develop on its own. Look at that push right on up there, guys. Remember, we got long where? In the demand zone. And what do we call this level up here? This is your supply zone. And where are we looking to take profits? In the supply zone. That's exactly what we want to do. We want to make sure that we're taking off the profits in front of that supply zone. That is also what? It is a level of resistance. It is a level that when the price action reaches, it tends to pull back away from it. Boom. And just like that, $3,000. And that evaluation now becomes a funded account that is going to be traded with the prop firm. All of this using supply and demand zones, guys. Once you identify these levels, and once you can couple them with a larger trend on a larger time frame or a pattern on the chart, it strengthens the actual thesis behind it. You can set up your trade plan and manage your trade, manage your risk, make some money. Guys, let me know your favorite type of strategy. Drop it in the comment section below. Remember to smash the like button for me. Subscribe to the channel if you're new here. Hit the notification bell, and I'll catch you on another one. Peace.